Welcome to the New York State Association of School Business Officials webinar. Today's program is IRS Audit Requirements and Expectations. Your host for today is Donna Clement, Director of Professional Development. Operator assistance is available at any time during this conference by pressing #. Following the presentation, you will be invited to a live question and answer session. You may send a chat question at any time during the presentation using the chat window indicated by the speech bubble icon located to the right of the presentation. Please address chat questions to the Q&A group using the drop-down list located at the bottom of the chat window. And I will now turn the call over to your host, Donna. You may begin.
Okay, thank you, Judy, and welcome to all of you, and thank you for joining us for today's webinar about IRS Audits and Expectations. And we have Diane Morris here from the Buffalo office, and she's an FSLG specialist, and she'll let us know what that all means. Make sure you ask questions. We're ready for you, and you can either use the chat window for now, and there will be 2 times during this webinar where you can call in, and we will be taking any of the chat questions that are listed. Make this as good a session as you can. Diane has prepared lots of good information for you. Make sure you get your questions answered. Diane, it's all yours.
Hi, my name's Diane Morris. I've been with the IRS for about 34 years. Working with employment taxes for about 18 years. And in this webinar, we're going to cover a lot of different topics, all related to governmental entities and tax law compliance. We're going to start with talking about the FSLG division of the IRS, which is the department I work in. Then we'll talk about common areas of employment tax noncompliance that we found when doing compliance checks and exams of government entities. We're going to look at 1099 miscellaneous returns, W-9s, backup withholding tax, Form 945s, the IRS TIN matching program, accountable plans, auto expenses, and determining whether a worker is an employee or an independent contractor. To me, one of the most important things that I'm planning to do in this webinar is provide you with a number of sources where you can find your own answers to your questions. Some of you may have questions as we go along, so there will be 2 times during the webinar when we're going to try to answer most of them. I work in the FSLG division of the IRS. FSLG stands for Federal, State, and Local Governments. We only work with governmental entities, including counties, cities, towns, villages, state governments, and school districts. Bear with me a minute here. I think I went forward too far. Okay, what does FSLG do? Number 1, the most important thing that we do is we provide education. And we speak at a lot of outreaches, a lot of seminars, and we also perform compliance checks at governmental entities. In addition to that, we have examinations that we perform at governmental entities as well. Now, a compliance check is not an exam, and I'm trying to get this to move, and it's not moving. Hold on. There we go. A compliance check is not an exam. It can be done in person or by correspondence and telephone. A compliance check is a review conducted by the IRS to determine whether a governmental entity is following record-keeping and information reporting requirements. The whole purpose of it is to educate governmental entities about the reporting requirements. It gives us an opportunity to provide information to the entity on any area we see where there is a lack of understanding or a lack of knowledge. In a compliance check, information returns like 941s, W-2s, 1099s, and 945s are reviewed. No financial books or records are examined, but there's an interview where we ask questions about 1099s, for example, and we provide educational information if necessary. Now, an examination is different. In an exam, we actually look at the books and records to determine whether the governmental entity correctly complied with tax laws. And we also make the tax corrections, if any, that need to be made. We're going to start talking about 1099 miscellaneous forms. And the reason I'm starting with this is because this is one of the most common areas where we find governmental entities making mistakes. So we're going to start with basics as a review and work from there. What is a 1099 miscellaneous information return? Well, it's a form required to report payments for services or a combination of services and products. What payments need to be reported? Payments of $600 or more for the year which are paid in the course of your trade or business must be included on a 1099 miscellaneous. There are specific boxes where certain types of payments need to be reported, like attorney's fees and medical service payments. And I have that listed on your PowerPoint screen. Now, related to payments to attorneys, if you make payments of $600 or more to an attorney who is not on your payroll, you need to include that amount on a 1099, regardless of whether the attorney is a sole proprietor, a partnership, or a corporation. This is an exception to the rule that corporations normally don't get a 1099. There are a good number of governmental entities which I have found over the years don't handle this correctly, so it's important to be aware of it. There is another exception I'd like to talk about next, and that's related to corporations that you make payments to, but they're actually payments for medical service. They're medical and health care payments. You report these types of payments in Box 6 of the 1099 miscellaneous. You would need to report payments to all sole proprietors, partnerships, and corporations if they're a medical service payment. So if you have a payment for medical services that you make to ABC Medical Services Incorporated, for example, you would need to give that vendor a 1099 at the end of the year. A medical payment includes doctor fees, drug testing, physical therapy. Payment to a pharmacy would not be included because that would be for a product and not a service, so a 1099 would not be required. Also, payments to government hospitals or tax-exempt hospitals would be exempt from this rule as well. The next slide provides some general information about corporations. A corporation is a separate entity from its owner, and you know that generally payments for services paid to corporations don't require a 1099. However, you may have the instance where you have a contract with a corporation and the corporate owner asks you to make the check for payment out to him or her directly rather than to the corporate name. If you do that, you need to remember that you would be required to give them a 1099 miscellaneous at the end of the year made out to that individual's name if the amount was $600 or over. Also, if you're making payment to the individual, you would need to use their Social Security number and not the corporation's EIN. Now, it's really important to never assume that an entity is incorporated. An LLC stands for a limited liability company, not a limited liability corporation. A lot of people believe that at the last word there is a corporation, so they automatically do not give a 1099 to an LLC, and that's not correct. An LP is a limited partnership, and an LLP is a limited liability partnership. Now, there are a number of misconceptions, as I had said before, about LLCs, so I'm providing some helpful information about them for you. An LLC can have one or more owners. It can be taxed as either a sole proprietor, partnership, or a corporation. And you need to know how the LLC files so that you can determine whether or not you need to give them a 1099 at the end of the year. Well, what's the best way to find out how they file? You need to obtain a W-9 from the LLC to determine their status. It's important to remember to review the W-9 when you receive it back from the vendor to make sure it's properly filled out. Over the years, I've looked at countless W-9s that governmental entities have on file, and many of them are incomplete. For LLCs, you report payments to them on a 1099 if they're a sole proprietor or a partnership, and of course to a corporation if they're an attorney or medical service provider. It's really important to track your vendor payments. Make sure you combine payments made from all of your departments when you determine who should receive a 1099. I included an example for you. Your school district has a separate general fund and a capital fund. Each of the funds pay I'm a vendor $400 for the year. No individual payment exceeds the $600 criteria for filing a 1099, but combined they're $800, and so you do need to file that Form 1099. Also, don't forget about petty cash. I know most school districts keep very small petty cash funds, so most of you won't have a problem with this. However, if you have repeated payments to someone out of your petty cash, it could exceed that $600 limit for the year, and then there may be a liability for filing that 1099 at the end of the year. I'd like to review some common errors related to 1099s. It's very important to obtain the vendor's identifying information on that W-9, preferably before making payment. If you don't, it can result in problems down the line. If you make reportable payments to a vendor of $600 or over, and they haven't given you their TIN, their taxpayer information number, you're required to withhold backup withholding tax at the rate of 28% from your payment to them. We're going to talk about this in more detail later in the presentation. Several other common misconceptions include the following: incorrectly assuming that a payee is a corporation because the vendor's name includes the words company or associates, or because they gave you an EIN instead of an SSN, or if the vendor gives you a DBA name instead of their own name and they're a sole proprietor. The fact that a DBA name may include the words company or associates doesn't mean it's a corporate entity. If the vendor gives you an EIN, they could still be a sole proprietor. Also, many sole proprietors have very professional-sounding names. It doesn't mean they're incorporated. You need to use that W-9 to get their information from them. It's not uncommon for me to go to a compliance check or to an exam at a school district, and the only 1099s that I find are for vendors who have individual names. They totally overlook the vendors who have DBA names. So it's important to keep that information at hand. In auditing governmental entities, we found that they have included certain payments to employees on a 1099, which actually should have been included in the employee's wages and put on their W-2 instead. For example, if you pay an expense allowance to an employee, you would need to include that amount in their wages and withhold payroll taxes on it. It would be incorrect to put that amount on a 1099. If you pay auto expense reimbursements to your employees without meeting the accountable plan requirements, that amount would be a taxable fringe benefit and would need to be included in the employee's wages. We're going to talk about accountable plans in more detail later in the webinar. One of the most helpful forms that you can use to help yourself during the year to do your work related to vendors more efficiently is utilize a W-9. It's a request for a taxpayer identification number and certification. Why is it important? Because it provides you with the following information. It gives you the name of the vendor, their DBA, their filing status. It provides you with the vendor's Social Security number or EIN, and it has the vendor's signature certifying that the information on it is correct. So it really gives you a lot of helpful information that you need. Some points to remember about a W-9. If the vendor is a sole proprietor, the vendor's first and last name should be on line 1 of that W-9 because that's what you're going to need for the 1099. If the vendor only gives you their DBA name, you won't be able to fill out the 1099 correctly. You need their first and last names because for a sole proprietor, that's what would be put on line 1 of the 1099. If you put a sole proprietor's DBA name on the 1099 rather than the first and last name of the person, you'll get a mismatch report or a CP 2100 notice sent to you from the service center, and that can come along with a possible penalty notice. They don't send penalty notices out 100% of the time, but they can. So this would be an easy way to avoid it just by getting all the required information on the W-9 and utilizing it. If the vendor is an LLC, you need to make sure they check the box on the W-9, which tells you how they file. Just noting they're an LLC doesn't give you your answer. I actually frequently see W-9s with LLC listed, but there's no box checked on the W-9 as to how that LLC files. So at the end of the year when you need to file your 1099s, you don't have the information you need to prepare them correctly. So that's an important point to remember. I included a question related to vendor payments in the webinar to help. Let's look at that question now. Your school district hired a vendor to paint the interior of the high school over the summer. The vendor's name is Painting Company, LLC. What steps should your office take to get the necessary information from the vendor to determine whether you need to provide them with a Form 1099 at the end of the year? Next slide gives us the steps. You would give the vendor a W-9 to complete at the time you contract with them to do a job. Make sure the vendor completes the form and indicates on it how they file, either as a sole proprietor, partnership, or corporation. If the W-9 is not complete when it's returned to you, call the vendor. Tell them what needs to be added and have them either mail or fax that completed form back to you. Don't wait to the end of the year. If it's a sole proprietor, ensure that you have the first and last name of the vendor on the W-9. Sometimes the vendor will only provide that information in the form of their signature. That's not a good way to get the information. Many signatures are illegible, and when it comes time for the 1099 filing, you may not spell it correctly and end up with a CP 2100 notice and a possible penalty. There's a really good publication that provides additional information on this. And I don't know if it's on the slide. I don't see it there. Let me tell you what it is. It's publication 1281. Let me repeat that, publication 1281. If I was you, I would download a copy of it from the IRS website. I'll be mentioning this publication again later in the webinar because it also has a lot of detail in it about backup withholding tax as well. But it's an excellent publication. And I think that our next slide is a question. That's our next slide if anyone has any questions. Now is Judy...
Okay, Judy, if you'll please come and tell us how people can ask a question. And those of you who would like to, you certainly are welcome now to send a chat to us.
If you would like to ask a question, please press 7# on your phone, and you will be placed in a queue in the order received. Please listen for your name to be announced and prepared to ask your question when prompted.
Okay, we have a question from Charles Trainer. It says, how do you treat S corporations?
Okay, that's a very, very good question. You'd follow the general rules that you would for any other type of a corporation. If it was a medical service provider, then you would have to give them a 1099. If it was an attorney, you would have to give them a 1099, but they would follow the regular corporate rules.
Okay. Okay, and here's a question from Beth Gillette. Why would the vendor solicit the school district to complete W-9?
It's a school district that tries to get the W-9 from the vendor, and that's just to protect yourself so that you have all the information from the vendor in order to prepare your 1099s at the end of the year correctly.
Oh, I think Beth has something else to add. She's talking about donations.
Okay.
Okay, Beth, if you can reformat your question. We have an audio question. We'll take that, and then we'll come back to Beth's question. Okay, and our audio question is?
We have a question from Christine.
Okay, Christine?
Can you hear me now?
Yes.
Okay, my question is, sometimes we get a W-9 from vendors. It goes back and forth. We ultimately think it's filled out correctly. We complete what we're supposed to do, and it does show up on the mismatch report afterwards. What is the recourse through an examination process when someone is attesting to you all the information and it isn't correct?
Well, as long as you are following, if you do receive a CP 2100 notice and you follow what the required procedures are that are listed for you on that notice when you receive it in the mail, as long as you follow the procedures that are written down there, there should be no penalty, as long as you follow what you need to do. And if you do that, there's no penalty.
Are we allowed to stop using them as a vendor because we are not equipped or do not feel we're equipped to back up withhold from a vendor?
That's really between you and the vendor. That would be nothing that the IRS or the government would tell you to do.
Okay.
But that would be your choice whether or not you would want to continue to utilize that vendor. That's purely an internal choice.
Okay, thank you.
Sure.
Okay, we have a few questions here. We'll finish up with Beth. Beth says, when a company donates to the school, they're requesting a W-9.
That's interesting. As a government entity, the school is actually exempt from any type of backup withholding as a recipient of the donation. And it really wouldn't matter as to a donation. The company would really never give a 1099 to the school either. So that could just be the procedure that that company follows internally, but it's not a requirement.
Okay. And Maura Carlson has a question. She says, if a vendor is a sole proprietor, but all invoices come in a DBA name, how do you suggest setting up our vendor file to keep accurate records for payment and 1099s?
Okay, say the beginning of that question again.
Okay, if a vendor is a sole proprietor, but all invoices come in the DBA name, how do you suggest setting up the vendor file to keep accurate records for payment?
Okay. The fact that the invoices come in the DBA name should not really affect you at all, because if you will know what the sole proprietor's first and last name is from that W-9. That's why it's so important to, on your W-9, have the sole proprietor's name. And it is also important to have the DBA name on that W-9. But the reason I am stressing their first and last name is because the majority of incorrectly prepared W-9s that I find are ones for sole proprietors that only have the DBA name and do not have the individual's first and last name. So it's in the best interest of the school to have both names on there, keeping in mind that for 1099 purposes, the 1099 has to have the sole proprietor's first and last name on it. For purposes of your internal record keeping for payments to that vendor, it would be important to have that individual vendor's first and last name on your internal system. I don't know if your system allows you to have two names, a DBA name as well as the first and last name of the vendor. But again, that's an internal, you would have to handle that internally, just so long as you keep a record of that sole proprietor's information. So at the end of the year, the 1099 would go to the correct name.
Okay. And Mike Ivanoff has a question, and he's saying, please explain the 1099-R.
Okay, we really aren't covering that in this presentation. I very, very rarely see it related to school districts. Mike, I would suggest you go right to the IRS website and just click in or type in the 1099-R, and you'll get a lot of information on it right at the irs.gov website.
Okay. Looks like that's the questions for this session.
Okay.
Okay, so
We're going to move along.
yeah, and keep those questions coming.
All right. Bear with me a minute. Okay. The next area that I wanted to cover is the IRS TIN matching program. It's a tool for payers to verify the accuracy of the name TIN information that you have before you submit your information returns to the IRS. If you haven't used it yet, there is an online tutorial at the program's webpage to teach you how to utilize it. It's open to payers of reportable payments, including interest, dividends, and non-employee compensation. It allows you to verify payee TINs before filing your 1099s. The system allows a user to input TIN name combinations and then matches your combination against the master files. The IRS will inform you if the name TIN combination matches the database. You can obtain additional information at the IRS website under e-services, or you can call the number that I have there on the screen, and you'll be able to speak with someone who will give you the answers to the specific questions that you have about the matching program. There's some really good reasons to use the TIN matching program. Number one, it helps you avoid TIN errors. It reduces backup withholding tax notices. It helps you meet reasonable cause to avoid penalties. And at the bottom line, actually, is that it can help you save time and money. Again, it depends on how many W-9s you utilize and how many 1099s you actually have and how large of a school district you actually are. But it can be beneficial for you. The next area I wanted to cover is backup withholding. And the question is, are you required to backup withhold? If you make reportable payments to persons who have not furnished you their valid TIN, backup withholding then becomes an issue. You would need to withhold at the 28% rate that I previously mentioned. Next question, when do we begin backup withholding? The general rule is for vendors who haven't given you a TIN, backup withholding begins when aggregate payments for the calendar year to that vendor equal or exceed $600. However, if you are continuing to make payments to that vendor in the next calendar year and they still haven't given you their TIN, backup withholding tax starts with the first dollar paid to them in that next year. How do you report the amount of backup withholding tax? Well, you report it to the payee in the IRS in Box 4 of the 1099 Miscellaneous. This applies even though the amount of the payment may be below the normal threshold for filing the Form 1099. Remember, I had explained that if you continue to make payments to a vendor in the next calendar year and they still haven't given you their TIN, you need to take out the 28% backup withholding tax from the first dollar paid to them in that year. So in that subsequent year, if your gross payment due the vendor is $400, you would have the 28% backup withholding tax amounting to $112, and you'd pay the vendor $288. You'd need to file a 1099 for that vendor, even though the payment was under $600 because of the backup withholding tax issue. How do you report the backup withholding tax you withheld from your vendors? The answer is that you report it on a Form 945. A 945 is an annual return due January 31st of the following year. Ordinary deposit rules apply. You can get more information about a Form 945 in the instructions to that form and also in Pub 15. You would make your Form 945 deposits separate from your 941 deposits. And you don't include your backup withholding amounts in with your 941 payments. This could cause a problem down the line for you. So it would all have to be done separately. Where can you get additional information related to W-9s and backup withholding tax? Well, there's several places. The W-9 instructions, the 1099 general instructions, Pub 1281 that I had told you about earlier. It's an excellent source of information related to backup withholding. The instructions for the Form 945. And you can obtain copies of all of this information at the IRS website. Next topic I wanted to cover is fringe benefits. We're going to talk about what a fringe benefit is, how to tax it if necessary, and what publications you can refer to that will provide you with additional information that will be helpful to you. A fringe benefit is a form of pay for the performance of services. It can be in the form of property, services, cash, or cash equivalent. All fringe benefits are taxable and must be included in the recipient's pay unless there is a law that specifically excludes that fringe benefit. So, what are the steps to take related to determining whether you're correctly handling fringe benefits? First, you need to identify the specific benefit provided to your employees. You then need to determine if the benefit is excluded from taxability by a specific law, or if it's fully taxable or only partially taxable. I wanted to provide you with a number of sources of information related to fringe benefits. The Taxable Fringe Benefits Guide that's at the IRS website, to me, that is the most comprehensive source of information that I've seen. It has a lot of detail related to many fringe benefits, and I would at least download it to your computer or print it out. It may be too many pages to print out, but it's an excellent, excellent publication. Another publication that's good is 15B, and the Quick Reference Guide for Public Employers is very, very good as well. That is a little bit shorter than the Taxable Fringe Benefits Guide, has less information in it, but it does have more general information in it in addition to fringe benefits. And Pub 963 is excellent as well. That's at the IRS website, and that is specifically geared toward governmental entities, and it's very, very helpful. For those of you not familiar with the Taxable Fringe Benefits Guide, I wanted to show you how to find it at the IRS website. I've had over the years a number of people email me or call me and tell me that I have mentioned it to them in an outreach or a seminar I spoke at, and they can't find it. So I wanted to help you find it yourself. Once you get to the IRS.gov website, there is a tab titled Government Entities. After you get there, you'll see tax information for federal, state, and local governments. Click on that. On the left side of the screen, you'll see educational products. Click on that, and it will take you to the Taxable Fringe Benefits Guide. That same location where you find the Taxable Fringe Benefits Guide, you'll also find Pub 963 and that Quick Reference Guide for Public Employers. Pub 963, just to mention it again, is a great deal of information on fringe benefits, employee independent contractor issues, Social Security, as well as many other areas. It's really, really helpful. Now, if you determine that a certain fringe benefit is taxable, it needs to be included in the employee's wages and on their W-2. You would never put an employee's fringe benefit on a 1099. And the taxable fringe benefit, the general rule is that it's subject to federal withholding, Social Security, and Medicare. We're going to talk about accountable plans next. And when an employee is reimbursed for a legitimate business expense, that reimbursement must be part of an accountable plan for it to be non-taxable to the employee. A plan under which an employee is reimbursed for expenses is an accountable plan only if, number one, the expense is in connection with the performance of the employee's work. Number 2, there must be an adequate accounting by the recipient. They need to verify dates, place, amount, and business purpose of their expenses, usually on a voucher or an expense report. And number 3, the employee must return to the employer any advance amounts they receive from the employer in a reasonable amount of time. Now, again, that Taxable Fringe Benefits Guide has a great deal of information on this. What is a non-accountable plan? It's an allowance or reimbursement program that does not meet all 3 requirements for an accountable plan. Amounts made under a non-accountable plan are income to the employee and must be included in wages with payroll taxes withheld. Details related to withholding, per diem, travel advances, accountable and non-accountable plans are all found in the Taxable Fringe Benefits Guide. What's an expense allowance? An expense allowance is an amount given to an employee without accountability. It's taxable wages to the employee. For example, $300 per month given to an employee for business usage of their personal vehicle. That is additional wages. It doesn't matter whether that $300 is for mileage or any other business expense. Now, what I've done is I've included a couple of examples for us to review. Let's look at the first one. A school district assistant superintendent is provided with a $400 per month allowance for his business expenses, including the business usage of his personal auto. Okay, and it's not part of an accountable plan. Is this a non-taxable fringe benefit? No, it's a taxable fringe benefit. The $4,800, which is the $400 times 12 months, must be added to his wages with payroll taxes withheld. Let's look at a second example. A high school principal is given $300 per month so that he can purchase life insurance for himself. Is this a non-taxable fringe benefit? No. The $3,600, the $300 per month times 12, must be added to his wages with payroll taxes withheld. The only exclusion for life insurance is the group term coverage, which has very specific requirements to qualify. If you'd like additional information related to group term life insurance, you can refer to those publications I mentioned in a previous slide, and they will provide you with a good deal of information that will help you. Now, I've actually provided another example, but this is of an employee receiving cash in lieu of an allowable non-taxable benefit. Pursuant to a negotiated agreement, employees of a school district who opt out of the school's health insurance plan receive $2,500 for the year. Is this a non-taxable fringe benefit? No. This cash must be added to the employee's wages with payroll taxes withheld. It would be incorrect to include this amount on a 1099 for your employees. It needs to be included on a W-2 along with their wages. I wanted to provide you with some information about your employees using their personal vehicles for business. 2009 federal mileage rate is 55 cents a mile. I'm sure you're all aware of that. If you reimburse your employees at the 55 cents per mile rate or less, it's non-taxable to them, as long as it's part of an accountable plan. If you reimburse them an amount over this rate, the excess amount is taxable to the employee. If the employee chooses not to be reimbursed, they can't claim the mileage expense on their personal tax return as a business expense. But that's just for your own information. Remember that your reimbursement must be a part of an accountable plan that we talked about earlier. Now, related to employer-provided automobiles, the general rule is that separate records of business and personal mileage must be kept by an employee. If the records are provided by the employee to the employer, only the personal use is taxable to the employee. If records are not provided by the employee, then 100% of the use of the vehicle is taxable to them. The employee can then deduct any business use on their own 1040 return. All of the valuations we're going to be talking about in this outreach, in this seminar, are discussed in the Taxable Fringe Benefits Guide in detail. So I would refer you to that for a good deal of additional information in this area. There are 3 different special auto valuation rules: the lease valuation rule, the cents per mile rule, and the third is the commuting rule. Now, over the years that I've been auditing, I've seen a great deal of inaccuracy and misconceptions related to these rules. So I wanted to review with you the general requirements and then refer you to the publications where you can really find a lot of information for yourself. In the lease valuation rule, the employee's personal use of the auto needs to be computed as a percentage of total use. So the employee needs to keep records of all of their business and personal usage of the vehicle. You need to keep in mind that all commuting miles between the employee's home and the school office where they work is personal mileage. After the personal use percentage is determined, you need to determine the vehicle's fair market value on the first day the auto is made available to the employee. Using the annual lease value found in Pub 15B for that vehicle, you multiply the annual lease value by the percentage of personal use you computed. If you provide fuel for the vehicle, you would need to add in 5.5 cents per mile times the number of personal miles. That total would be added to the employee's wages with payroll taxes withheld. Now, I wanted to give you an example of this. Here's an example of using the lease valuation rule. The superintendent of XYZ school district is assigned an auto provided by the district. He or she drives the car 20,000 miles for the calendar year, of which 4,000 miles were personal miles. This is 20% personal usage. The fair market value of the car on the first day it was made available to him or her was $14,500 for an annual lease value of $4,100, which is what you would get from Pub 15B. Personal use is valued at $820, which is the $4,100 times 20%, plus $220, which is the 5.5 cents per mile times the 4,000 personal miles for fuel costs. The total to be included in their wages is $1,040, the $820 figure plus the $220 figure. The next rule that I wanted to review with you is the cents per mile rule. To use this rule, the vehicle cannot have a greater fair market value in the year placed in service than a maximum amount determined for each year. For 2009, it was $15,000 for cars. The auto must be used regularly for business, which means that at least 50% of annual mileage needs to be for school business. The vehicle must be driven at least 10,000 miles for the year by employees. If fuel is not provided, the standard mileage rate can be reduced by up to 5.5 cents per mile. For 2009, the standard mileage rate at 55 is 55 cents per mile. If no fuel is provided, the cents per mile rule would use the 49.5 cents, 49.5 cents, which is the 55-cent rate minus 5.5 cents per mile. Now, I know as I'm reviewing this with you, it may very well seem very confusing, and I understand that. That's why, again, I'll refer you to that Taxable Fringe Benefits Guide because it has examples in it as well as a great deal of comprehensive information in this area. The last valuation rule is the commuting rule. The commuting rule can be used for a vehicle that is owned or leased by a governmental entity. It has to be provided to the employee for business use. The employer must require the employee to commute in the vehicle with a valid non-compensatory business purpose. It can't just be a way to give the employee additional compensation. The employer must have a written policy prohibiting personal use other than commuting. The employee can't use the vehicle for other than de minimis or very minimal personal usage. If these criteria are met, the taxable benefit is $1.50 each way for every day worked. Okay, so if it's one round trip commuting travel between the employee's residence and the office they work in, it would be $3 a day. So some people call it the $3 a day rule. Let me give you an example of this in our next slide. A government entity transportation department employee who is on call 24 hours a day to respond to road emergencies is required by his employer to commute in a vehicle outfitted with communications equipment the employee would need if called out at night. So they provide him with that employee with a government vehicle. In 2009, this employee worked 220 days. So it would be 220 times the $3, $1.50 each way, equals the $660 that would be added to his wages. For government entities, the commuting rule cannot be used for a control employee. Now, that's an elected official or an employee with compensation at executive level 5, which for 2009 is $143,500. Control employees must account for their personal versus business mileage and use the general valuation rule or the lease valuation rule. Let me give you an example of a control employee. A school superintendent is provided with a vehicle pursuant to his employment agreement with the school district. The school district computes the taxable portion of this fringe benefit using the commuting rule. His salary for the year is $165,000. Is a school district using the correct rule to value this taxable fringe benefit? No. This worker is a control employee, and the employer, the school district, can't use this rule to value the benefit. Our next topic that I wanted to cover is how to determine whether a worker is an independent contractor or an employee. I've provided a lot of information in the next few slides for you related to this, but I would refer you with additional questions if you need additional information. And I think I have this on a slide, on one of the future slides, but I wanted to just mention it now. Pub 963, Chapter 4, has a great deal of information specifically in this area for governmental entities. There are 3 categories of evidence to consider in determining whether a worker is an employee or an independent contractor. And they start with behavioral control. Does the business have the right to direct how, when, and where to do the work done by the worker? Does the business provide supplies or equipment to the worker? Is the worker required to follow established routines and policies? Second area is financial control. Who controls the financial aspects of the job? Does the worker have a significant investment related to their business? Does the worker have overhead expenses? For example, do they rent an office for their business? Does the worker hire their own clerical workers or assistants? Does the worker have an opportunity for profit or loss? That is a very important one. Are there services available to the general public? Relationship with the parties is our third category of evidence. Does the worker receive employee benefits from the company? Is there a written contract between the company and the worker? You would need to look at it to determine what clauses it contains related to behavioral and financial control. Are the worker's activities integrated into the operations of the business? Or is it like the hiring of a painter to paint a building, where the worker's painting activities have nothing to do with the operations of the business? No one factor is determinative. You need to look at all of the factors related to the position to determine the correct classification. An important factor, again, to keep in mind, though, is does the worker have an opportunity for profit or loss? An independent contractor would, an employee would not. Now, what are some indicators of independent contractor status? Workers are not required to follow specific methods or instructions for completing their work. Worker makes their own schedule. Worker furnishes their own supplies and equipment to perform the work. Workers can hire their own assistants to complete the job, with the worker paying the assistants. The business relationship is often short-term. The worker can have an investment into a facility with overhead expenses of their own. The worker would have or could have an opportunity for profit or loss. What are some of the indicators of employee status? Let's review some of them. The worker is required to follow specific methods or instructions for completing their work. The worker is required to work a set amount of hours and or days each week. The employer supplies the office, equipment, and tools needed to complete the work. The worker can receive training from the employer for completing assignments. The work assigned is a part of the operations of the business. The business relationship is often longer term. The worker does not handle their own sales receipts. The worker can receive fringe benefits from the business. The worker has no risk of loss from the business. The right to direct and control. The right to direct and control is an important part of the aspects of an employer-employee relationship. Employment tax regulations provide that an employer-employee relationship exists when the business for which the services are performed has the right to direct and control the manner in which the services are performed. It's not necessary for the governmental entity to actually direct or control. They only need the right to do so. The nature of a worker's occupation affects the degree of direction. For example, a physician on staff would require less supervision as related to his duties. His work is so specialized, and he's expected to know what he's doing, so there would not be someone there specifically telling him or her how to do an examination of an individual. There are a lot of common misconceptions related to employees. Employees can be part-time workers. Employees can be temporary workers. Employees can be probationary period workers. An employee can be someone who says he or she is an independent contractor. The fact that they say they're an independent contractor is not the controlling factor. So what do you do when you have the situation where you're trying to determine whether a worker is an employee or an independent contractor? First, you apply each element in the categories of evidence that we looked at. You apply each element to the facts and circumstances surrounding the work relationship. You evaluate the relative impact of each element. And then you determine, after you've done your evaluation, if autonomy or control predominates, remembering that the business only needs the right to direct and control. It doesn't actually need to do it, in fact. And this is where I'm referring you again to Pub 963, Chapter 4. It's well written, and it has detailed information for governmental entities related to this area. Now, if you're still not sure of the correct answer, you can always submit an SS8. And you will, when you submit that form, you will get a letter back with a detailed answer, including the tax law, as to how that worker needs to be classified. You can get a copy of the SS8 from the IRS website. Now, I wanted to include in this webinar several additional helpful sources of information that are found at the IRS website. And very frequently when I speak at seminars, very often there's a good number of participants at the seminar who are not familiar with this information, and it can be very, very helpful to you when you have a question or a problem. FSLG fact sheets. These pages contain detailed information on specific fringe benefits, information return reporting, backup withholding, among other topics. You can just check out the topics. It's very easy to find it. And they're all found at that federal, state, and local governments page that we talked about before. And you'll see FSLG fact sheets listed there. The next item where you can find helpful information would be FSLG Facts, FAQS online. These pages provide information as well as question and answer scenarios related to many areas, including fringe benefits, Medicare, rehired annuitants, retirement plan issues, schools and teachers, 1099s, plus many, many, many more areas. Very, very helpful. Also on that same FSLG page, on the left side of the screen, you can click on the FSLG newsletter. This newsletter, it's a semi-annual newsletter in electronic format. It provides information for all types of government entities on current developments that can affect you. You can sign up online to have that newsletter sent to you via email, and it's an excellent publication. Related to the newsletter, there is a topical index online, and you can click on any item in that index, and it'll take you to the issue that actually had that article in it with the educational material you need. There are past articles on fringe benefits, deposit rules, emergency workers, excise tax issues, home care services, retirement plans, student issues, bonds, and many, many other areas. In that same place where you would find all these other sources of information, you'll also see the FSLG Toolkit. Now, the toolkit contains links to useful publications and tax-related forms that you as a school district may need during the course of a year. Now, I know we have a good amount of time left, so this will help us to be able to have enough time to answer questions.
Okay, we do have 3 questions that came in, but we'd like once again to have Judy remind everyone how they can come and ask an audio question.
Hi, if you would like to ask a question, please press 7# on your phone, and you will be placed in a queue in the order received. Please listen for your name to be announced and prepare to ask your question when prompted.
Okay, thank you. Now, Mary Gibson has a question here, and it says, is a health fund, a VEBA benefit, taxable? Employees can use this fund for medical costs.
A VEBA fund would be something that we normally don't handle in our division. That would be our pension division that would handle that. They handle all kinds of benefits such as that. But what I can do is, if you would like to email me that question, I can research it for you or refer you to a department within the service that would be able to help you with that. If you want to, you can email Donna, she could email you, right?
Sure.
And you could give her my email address, and then she can send me the question.
Right.
Okay?
Okay, Mary. And then Mary has another one.
Mm-hmm.
And it says, is life insurance taxable for a former superintendent? The district pays for the annual premium for former superintendents. Also, is the life insurance benefit taxable for the current superintendent?
Okay. That's a very good question. And this is something we run into at compliance checks and exams frequently. I don't have all of these specific information that I would need from Mary, so let me answer it, giving you probably more information than you really need, but I want to cover different kinds of insurance plans. As you know, related to group term life insurance, there are very specific rules which need to be met for it to actually be defined as a group. There have to be a certain number of employees and in order for it to be even considered to be group term life. And you know that there is a non-taxable part of the fringe benefit, and then there can be a taxable part if the amount of coverage exceeds the limitation. But from what I'm reading from your question, you're just saying life insurance. So it seems to me that this probably is not part of a group term life plan. That is a part of his agreement with the school district. It was negotiated that he or she would get life insurance benefit. And if the group term group term requirements are not met, definitely this would be a taxable benefit. The way I normally see this written in a employment agreement would be that the superintendent would receive coverage of a certain amount for the rest of their life, or and it could be worded in a different way. Let me give you an example. The school district would allot $2,000 toward the life insurance for the former superintendent for each year. Now, that amount would be taxable wages to that person. Whether it's given directly to them as a lump sum, the $2,000 amount, or whether it's actually paid to an insurance company on behalf of the superintendent. That would be taxable wages to them. It would have to go on a W-2. It would not go on a 1099, even though the person is retired. That benefit would have to go on a W-2 to the individual.
Okay. And we have another question here from Charlie Trainer, and it says, what is an example of an excluded benefit you have seen in a school district that has caused major problems for the district?
Oh, goodness. Let me think on that a minute. Well, I can give you an example of a very common benefit that I find that there needs to be a tax adjustment made to it, which would cause a problem, would be cell phones. At school districts, some school districts do not assign cell phones to particular employees, but there are other times that school districts do have a good number of cell phones that they assign to particular employees. And they do not have any type of a requirement that the phone should not be used for personal usage. Now, cell phones, according to law since the 1980s, are considered to be listed property. Listed property, the fact that they are listed property means that there's very strict record-keeping requirements related to the employees not having this amount added to their wages. Okay, what this means is that the employee would have to account to the school district for their personal usage of the cell phone. And the way I normally see it when I go out for a compliance check or an exam is that there's no accountability. And what happens then is, again, because it's listed property and there's very strict record-keeping requirements, the whole amount has to be added to the employee's wages with payroll taxes withheld.
Wow.
So that's a benefit that I see an adjustment needs to be made frequently, and it can cause a problem.
Any others that come to mind that happen with school districts?
Well, also if there's group term life insurance and the amount of life insurance that's given to the employees exceeds the limitation, very often I'll see that not being included in the employee's wages as well. I think that's about it for now.
Mm-hmm. Okay.
Any other questions?
No questions listed here.
Okay.
Any other points that you think are important for the school business office to pay attention to, or any things coming up that you can share with us that we should be aware of?
Well, related to, now I don't know if the school districts that are participating in this webinar have vehicles that are assigned to employees. So very often the superintendent and assistant superintendent is assigned a vehicle. And it's just really important to be careful to make sure that you're utilizing the correct vehicle valuation rule related to this. And again, the Taxable Fringe Benefits Guide has that information for you that will help you. But I do see that being a problem in a number of the examinations that I've gone out to.
Okay. Anything else?
One other area I'd like to cover.
Good.
related to the discussion that we had about determining whether an individual worker is an employee or independent contractor. In a school district, very often you may have a separate fund which pays for for workers who work at athletic events.
Okay.
And you may have timers, clock workers, just people who work at games, for example. And normally the norm is for these people to be an employee anyways as a teacher, normally a teacher, or a phys ed department worker. And what I've run across very often is that the school district would include the amounts that person, that teacher or that athletic worker, would receive for their being a timer or a whatever kind of job they do with the athletic event, that they would have that amount put on a 1099 and not included in their W-2, and that would be incorrect. That amount that they receive, because the work that they're still being controlled by the school district related to their work at those games, as a timer, etc., chaperone, etc., that still actually needs to be added to their wages because the control factors are there.
Okay, and we have an audio question.
We have a question from Christine.
Yes, hi. I have a question regarding Medicare reimbursement to retirees. It goes back and forth at various intervals as to whether or not payments to retirees, reimbursing them for Medicare premiums, is reportable on a 1099 or not.
Okay. If it is actually an accountable plan, you're okay. So say, for example, your school district reimburses you're talking about the Medicare Part B, I'm thinking? Okay.
Correct.
Okay. In order for it not to be taxable to your retirees, you have to verify that they are actually covered under it and the amount that they are actually paying for it. So if you reimburse them for it, you need to have something in your records for each one of those retirees that if someone comes out to audit you, you can show them that this is the amount that the retiree was billed, and we are reimbursing them that dollar amount to verify the coverage and the amount. So as long as it's part of an accountable plan where they're actually accounting to you for the amount that they incurred, verifying to you that they incurred it, you're fine. When you would have a problem, when there would be a taxability issue, would be if you were just not reimbursing, but giving them the money without accountability. So if you gave them, for example, $100 a month to pay for their Part B or any other expenses they have related to this, without accountability, that would be taxable to them.
Well, I guess I have a follow-up question to that then. Most government employees participate in New York State's NYSHIP Empire Health Plan. That health plan requires at age 65, whether or not the retiree has enrolled in Social Security, they are considered in a Medicare premium bucket with zero proof that they have to be in it, but the plan begins reimbursing their health care expenses and their claims at the Medicare rates, which is Medicare's primary at 80%, the health plan Empire is secondary at 20%. They don't care whether or not they actually enrolled in Social Security and are paying the Medicare, but they are processing their claims as if they are Medicare eligible. So there really is no proof for most of the employees. It's an assumption that they better enroll because the plan's turning secondary no matter what.
Right.
So I guess the question there is no technical, if you walked in, looked at the books and records and were looking for compliance, there is nothing to prove that they actually are paying Social Security. If they choose not to enroll, they're just having our plan be secondary. And their rates are reflective of that, meaning when you turn 65, the Medicare rates for a retiree drop down with the assumption that that plan's becoming secondary.
So what you're saying is that, and correct me if I'm wrong, what you're saying is that this retiree may not be actually paying the premiums for this?
Correct.
Well, then if you reimburse them for it, that's a taxable event to the individual.
Well, NYSHIP says no, because let's say a normal person pays $1,000 a month for a premium, and when you are turning 65, regardless of whether you've enrolled in Medicare or not, or in Medicare, they are dropping you down from the active employee rate of $1,000 down to the new rate of $700 for a family when you are supposedly supposed to be enrolled in Medicare. So the state's position is they have to enroll no matter what, and because their rate is less, we're required to reimburse them the Medicare reimbursement rate. It's irrelevant. I mean, everyone has had a retiree at their district who didn't enroll or forgot to enroll and was penalized for that. I'm not really sure. I guess it's a moot point. I mean, if the IRS came in, they'd have to figure that out, but it's really the technicalities of the state's position.
Exactly.
I guess we'll have to just see how that plays out. Okay.
Exactly. Again, I can only tell you the IRS rules that it has to be part of an accountable plan. You've got to verify that the individual actually made the payment for that premium. And if they didn't, they get reimbursed. It's taxable.
Okay.
That's all I can really tell you at this point. Okay?
Thank you.
Sure.
Okay. All right. We have a question from Alita Zuber, and she says, how often are school districts audited?
I have been to the majority of the school districts that I go out to audit have never been audited by the IRS before.
Oh.
We do not have a lot of employees who are in this division, and we do not limit our audits to school districts. At the beginning of the presentation, if you remember, I had mentioned that we audit all types of governmental entities. Cities, counties, state agencies. There's even a group that audits federal agencies. So because of that, school districts are not the only area that we go out to. But the majority of the school districts that I audit have never been audited previously. And I really consider it a great educational opportunity. I try to provide as much educational information as I can when I go out to do an audit, because I'm thinking this may be the only time that someone from my division will ever be out there to do it. And I also always leave my my phone number and my email address so they can ask me questions down the line. So I try to make it as educational as I can.
What's your territory?
New England.
Oh. Okay.
Large territory.
Yes, it is. How often do you go out and audit?
Well, we spend a good part of our time auditing, and some audits take longer than others. Again, it depends on the size of the governmental entity. It can be a longer time at a larger entity, obviously. And then we also do the seminars and the outreaches and the compliance checks, which also are educational opportunities for us. But every day is a different day. One day I could be at a county, the next day I could be at a school district. Any other questions?
None that are listed here. We have a few more minutes if anyone has a question that hasn't been answered, any topics, concerns, anything at all. We certainly have a few minutes.
One area,
let
me just mention one more area to you. Related to when you have in a department, in your office or in a department, a worker who is retiring, and the person retires, and you bring them back to train the person who takes over for them. Very often I found that it's handled incorrectly by governmental entities. When you bring a person back, a retiree back, to hire their replacement, you can't pay them with a 1099. They normally would need to be treated as an employee when they come back because the control requirements are all there. So that is another area that I have found problems in. and it's something that's good to be educated about.
Okay, because that certainly is an issue that we
Yes.
run into often.
Yes.
And
absolutely.
so many of our retirees do come back and work with their districts and help out. Because there aren't the training programs that there used to be at the state ed, and people don't necessarily work through the jobs as they did at one time either.
Right, exactly.
Okay.
Exactly.
Good point. Good point. Anything else?
Not that I can think of off the top of my head.
All right. And Charlie would like to know how many participants did we have for the webinar. We have 17 sites, and people register per site, and we're never sure how many people are listening at each site. But we're also, Diane and I were talking before this webinar started, and we would like to plan to offer this again so that more people can take advantage of it. But we haven't chosen a date yet. But thank you for attending, and certainly look forward to you being a part of the webinar. There are actually 2 others that are coming this month. One is with the New York State School Boards, and it's talking about the Medicare issue or Medicaid issue, and the other is on November 16, and it's part of our monthly series, our monthly planner series, and we're going to be talking about the budget, developing it and continuing it, beginning it, making sure that all those components are there so that it'll be a success and it will pass. Actually, the January webinar is going to be talking about that budget vote and all that goes in and all of the PR that's involved with it. So stay tuned for those 2 webinars on budgets, the one on November 16th and then the one for December. And on November 12th is the NISBA webinar for the Medicaid. So thank you for attending, and look forward to having you join us at another webinar. And thank you, Diane. Great job.
Thank you. I appreciate the opportunity.
This concludes today's webinar. Thank you for attending.
The moderator has ended the conference. Goodbye. Thank you for calling.